Welcome back to Investing Talk Podcast. We're going to be looking at Lexicon Pharmaceuticals today.
Lexicon Pharmaceuticals.
Yeah, and you sent over a whole bunch of information about them, like company overviews and how they've been performing recently, and like financials and even some technical analysis.
A lot to unpack.
Yeah, so let's kind of pick apart the most important stuff.
I think that's a great idea.
Yeah.
So we can try to distill everything down, figure out the most important stuff for our listeners to know about Lexicon.
Sounds good.
Okay.
So first things first, like what does Lexicon Pharmaceuticals actually do?
Well, so they were founded back in 1995
Okay.
in the Woodlands, Texas.
Hmm.
And it actually, originally they were focused on genomics,
Mm-hmm.
but they've kind of transitioned over the years, and now they're really a biopharmaceutical company.
Okay.
And that basically means they're working on discovering, developing, and commercializing treatments for, a variety of diseases.
Okay, so like what are some of their like key things that they're working on right now?
So their key product is Sotagliflozin. It's branded as Yimtifa,
Okay.
and it's been approved for both heart failure and type 2 diabetes.
Okay.
And they also have a couple other drugs in the pipeline that are pretty interesting. They've got LX9211, which is for neuropathic pain, and that one has completed phase 2 trials.
Okay.
So it's moving along.
Right.
And then they also have LX9851, which is for obesity management.
Interesting.
Yeah. And something else that's worth noting is they have some collaborations with major pharmaceutical companies
Oh, like who?
like Viatris and Bristol Myers Squibb.
Okay.
So for our listeners out there, that kind of collaboration, I mean, it can often be a sign that, a company's research is being taken seriously and, it can open doors to, getting those drugs out to a wider market.
Yeah, that makes a lot of sense. Okay, so we talked a little bit about what they do. Let's talk about their stock performance. How's the stock been doing?
Well, looking at the data, it seems like it's been a pretty volatile ride, especially over the last year.
Oh, really?
Yeah. Just in the past month alone, the stock price has fluctuated between 35 cents and 70 cents.
Wow.
And over the past 6 months, it's been even more dramatic. It's gone from a low of 28 cents all the way up to $2.45.
Wow, so like big swings.
Huge swings.
What do you think is causing that kind of volatility?
Well, I think there's a lot of speculation around this stock. People are trying to figure out
Yeah,
where it's
that
going.
makes sense. Okay, so where is it sitting right now? Like what's the current price?
So right now it's around 59 cents.
Okay.
And that's actually up about 3% or so from recent reports.
Okay.
As of March 31st, 2025, their market capitalization is about $204.
Okay.
So,
All right, so we've got a sense of, who they are, what they do, how their stock's been moving. Let's dig into their financials a little bit. What can you tell us about the company's financial health?
yeah. Now, this is where things get really interesting.
Yeah.
They actually reported really strong revenue growth in their last earnings report.
Right.
As of September 30, 2024, their revenue growth year over year was like almost 1,000%.
Wow.
Like 980% or
Okay.
something. Yeah, it's pretty crazy. And a big chunk of that growth was driven by this $25 million upfront payment from the Viatris Impifa licensing agreement,
Mm-hmm.
which happened in Q4 2024. And in fact, their total revenues for Q4 2024 were $26.06.
Okay.
So that kind of revenue growth is definitely a positive sign. That really suggests that their products could have some serious potential in the market.
Yeah, I mean, that is huge growth, but I'm also seeing here that they have a negative net margin. What does that mean exactly?
So net margin, basically, it's the percentage of revenue a company keeps after all its expenses.
Okay.
Like, the cost of making their products and running the business and taxes and all that stuff. So when you have a negative net margin, it basically means the company's spending more money than it's bringing in.
Ah, okay.
And, previously they reported a negative net margin of around negative 3.7 to 3%. So even though their revenue is growing really fast, I mean, it really makes you wonder about how efficient their operations are.
Yeah,
Or maybe it means that they're investing really heavily in research and development,
makes sense.
which, could pay off in the long run. But it's definitely something to keep an eye on
Yeah.
to see if this trend changes as PFAS sales kind of mature.
Okay.
Unfortunately, we don't have specific net income or earnings per share numbers for the most recent reports,
Okay.
but it's definitely something to watch in the future.
Right. So, kind of red flag, but maybe not.
Right.
Okay. And what about their debt situation? I saw something about a debt to equity ratio. What does that tell us?
So that ratio basically compares how much debt a company has to the amount of money invested by its owners.
Okay.
So in Lexicon's case, it's around 0.57,
Okay.
which means for every dollar they have invested in the company, they've borrowed about 57 cents. It's not crazy high, but it does mean they have to make those debt payments. And that can be a bit of a risk if they're not making a consistent profit.
Right. So they're using borrowed money to help run their operations, but it's not like an outrageous amount.
Yeah, it's something to be aware of, but not necessarily panic about.
Okay, that makes sense. So, we've seen some really positive things like their revenue growth, but then we've also seen these potential red flags like this negative net margin and, the stock volatility. What are analysts saying about all this? Like, what's the general sentiment towards Lexicon in the market?
So analyst ratings are kind of mixed right now, but I'd say overall they're mostly positive.
Okay.
Like recently, 3 analysts gave Lexicon a bullish rating,
Yeah.
and 1 gave it a neutral rating. And nobody's actually given it a bearish rating.
Oh, so that sounds pretty good.
Yeah. But the average price target has actually been lowered.
Oh, really? Why is that?
It's gone from $4 to about $3.25. So it's not just the losses that are worrying people,
Right.
It's also whether this revenue growth can continue while they're still losing money.
Right. Yeah.
And, when you look at social media sentiment, it seems like people are cautiously optimistic,
Yeah.
especially after some recent good news.
Yeah.
But there's still some hesitation because of the company's past performance. And there are definitely people out there who are more focused on, like, short-term trading and speculation than, long-term investment based on the fundamentals of the company.
Okay. Yeah, that makes sense. So how does Lexicon stack up against some of the bigger players in the pharmaceutical world?
Yeah, that's a great question. I mean, compared to giants like AstraZeneca and Eli Lilly, Lexicon is definitely a much smaller player.
Okay.
In 2019, their revenue was only about $324,
Okay.
while AstraZeneca brought in something like $37 billion.
Wow.
And Eli Lilly was around $28 billion.
Wow.
So there's a huge difference there.
Yeah.
But even though Lexicon is smaller, they're focusing on some really interesting niche markets,
Yeah.
like the heart failure treatment with Sotagliflozin.
Right.
But they definitely face some tough competition from these bigger companies who just have way more resources.
Right. Yeah. Okay, so what about any recent news or developments related to Lexicon? Anything interesting happening there?
Yeah, so there have been a couple of things. They got a complete response letter from the FDA
Oh, okay.
about Zynquista, which is another form of sotagliflozin, for a specific indication.
Okay.
But it doesn't seem like this was a huge setback for Lexicon.
Okay.
They were already focusing more on their broader pipeline anyway.
Okay, that makes sense.
Yeah, and on a more positive note, they finished enrolling patients for their Phase 2b study of LX9211,
Okay.
which is for diabetic peripheral neuropathic pain.
Yeah.
And they actually finished ahead of schedule. They even exceeded the number of participants they were aiming for.
Okay, that sounds promising.
It is.
Yeah.
And another thing, they were at the Leerink Partners Global Healthcare Conference earlier this year, which gave them a chance to, showcase their work and their plans to investors.
Right.
So, yeah, I think that faster enrollment for the LX9211 study is definitely a good sign for the future of that drug.
Yeah, that sounds really positive. Okay, let's talk a little bit about the technical analysis. What can we learn from the stocks, like trading patterns and stuff?
Well, as we talked about before,
Yeah.
the stock has been super volatile over the past year.
Right.
I mean, it's had a 52-week range of 28 cents to $2.45.
Right.
And recently, the price has gone up to around 59 cents.
Okay.
Usually, we'd want to look at stuff like moving averages and RSI
Mm-hmm.
to see if the stock is overbought or oversold.
Okay.
But unfortunately, the information you sent over doesn't have that level of detail.
Okay.
But given how much the price has been jumping around, there's definitely a chance for it to keep fluctuating.
Right.
So with the limited info we have right now, I think the most sensible recommendation would be to hold. If we had more data, like if the RSI was low and the price was breaking above a short-term moving average, that might be a sign to buy.
Right.
Or if the RSI was high and the price was struggling to stay above a longer-term moving average, that might be a signal to sell.
Okay.
But, without those specific numbers, it's hard to say for sure.
Okay. So, big picture, what are your overall thoughts on Lexicon right now?
Well, I think there's definitely potential here. They have some interesting drugs in development. They're seeing some really impressive revenue growth.
Yeah.
But there are also some risks to keep in mind.
Yeah.
Those ongoing losses, the volatility of the stock,
Mhm.
and the fact that they're competing with some much larger companies.
Right.
I think the next big thing to watch is their phase 3 clinical trials for sotagliflozin,
Okay.
which are expected to start later this year.
Okay.
So, all things considered, I think a hold recommendation is probably the most reasonable one right now,
Okay.
at least until we see how those trials play out.
Yeah, so be cautious, but be aware of the potential.
Right. So for our listeners, you've now gotten a pretty good overview of Lexicon Pharmaceuticals. We've talked about their innovative drug development work, especially with sotagliflozin, and we've seen that their revenue is growing really fast. But we've also talked about those persistent negative net margins and how volatile the stock price has been. It seems like the market is consciously optimistic, but a lot of people are waiting to see if they can keep growing their revenue while also getting those costs under control.
Yeah. And what's really interesting to me is that contrast between their strong revenue growth and those financial losses.
Mhm.
It really makes you wonder, can they use their successful products and their pipeline to actually become profitable and stable in the long run?
Right.
And that's something we'll all be watching for in their upcoming phase 3 trial results and their future earnings reports.
Great. Well, thanks for breaking all that down for us.
You're welcome.
I think our listeners now have a much clearer picture of Lexicon Pharmaceuticals.
I hope so. And as always, if you found this helpful, please remember to subscribe, like, and comment. We'll see you next time.
See you next time.